expertise. We've had 2 other webinars during the course of the year where Adyen was not involved. I think one case you had a panelist, but it's sort of it is an industry information sharing session, and you'll see that as we go through. Before we get started with that, I have a couple of points of HEDNA housekeeping. The first is, for those of you who've been involved with the HEDNA working groups, the Open Payment Alliance, the third-party compensation, and the guest-centric working groups, we've had some really impactful discussions over the past few months, including at the HEDNA Miami conference, and have decided that the 3 working groups have gotten to the point where there's so much overlap in what they're doing that we are going to create one mega working group, which will take the Open Payment Alliance name, but will incorporate third-party compensation and guest-centric payments as use cases, significant use cases of the Open Payment Alliance's payment manager. So for those of you involved, you're going to see a lot of information about that over the coming weeks. We're going through the internal HEDNA association processes of approving charters and assigning co-chairs. But for those of you who've been involved before, please look for information soon. For those of you who haven't been before, you can jot me an email at mike.carlo@xanderbay.com, contact HEDNA, or just drop a note in the Q&A session information here, or I'm sorry, send me a chat message directly, and I'll be sure that you're included. The other really significant piece of housekeeping is many of you are aware that HEDNA had a conference, now had a conference scheduled for Vienna at the end of January, early February. And unfortunately, given the situation on the ground in Austria with limited movement in the country and other things, that conference is going to be postponed to a bit later in the year. That is actually breaking news. Information will go out later today. But given we're having this conference, we want to make sure that you are aware of it. So with that, that's my housekeeping stuff. As far as this amazing webinar discussion, we're here to talk about the total cost of payments. And what's interesting is both Greg and Blake and myself have worked in other parts of other industries and other parts of the travel industry. And the context of why this is such an important topic for hotels is we don't have the same information that other industries have, primarily because of the legacy ownership and payment structure. So whereas you can talk to an airline, and an airline will know its chargeback rates, its fraud rates, its authorization approval rates on its direct bookings, the cost of payment by card type, by payment type. In the hotel industry, because payments are really done at a property level and are really focused on property-centric payment strategies, as we've called them here, we don't really have that information. So when we were putting together our agenda series for 2021, one of the topics that we knew we needed to get to was an understanding of what the total costs of payment are, because from an industry standpoint, we don't really know. So Greg and Blake are going to talk about some of the things that are fairly fundamental in other industries, but would be considered great innovations for the hotel industry. And obviously there are pros and cons of every system. So that is my context. With that, I would really love to turn it over to Blake and Greg. If you do have questions, please include them in the Q&A button at the bottom of the screen. I will be collecting them and interjecting them throughout the session with Greg and Blake. And so with that, thanks, gentlemen. I'm going to turn my camera off, and I am going to be as quiet as I can be, except for questions. So thanks.
Thanks, Mike, for great and detailed introduction, and very pleased to be with you today to talk about the total cost of payments. in the hotel industry. We will structure our discussion in three parts with Blake. First, we'll talk about the direct cost for hotel companies, and we will focus on the indirect and any hidden cost for hotels before looking at payments as more as a lever to increase, to have some benefits and increase revenues. Before going into the depth of our discussion, Blake, would you like to introduce yourself?
Yeah, absolutely. Hey everyone, I'm Blake Swenson. I've been in the payment space for about 6 years now. As Mike mentioned, I work at Adyen. I'm on our payment partnerships team. I manage relationships primarily with the major card networks, Visa, MasterCard, Amex, et cetera. And yeah, have some experience obviously on the processing side, but also on the merchant side as well. Before my time at Adyen, I used to work at Uber and was deeply involved in cost optimization for a global company. So excited to talk about this topic today.
Yeah, thanks, Blake. And my name is Greg Toussaint. I'm a director at Edgerton Company. We are strategy consultancy focusing on payments and with a dedicated area of expertise in travel payments, and we'll share our expertise in hotel, airline, and other aspects of the travel sector. So, Blake, let's start with the direct cost for hotel companies. When we mean direct cost versus indirect/hidden, we mean that what is directly charged to a hotel company, what basically you can have on an invoice that you receive, say, from a PSP, an acquirer, a fraud prevention vendor. So looking at you, Blake, from your experience at Adyen, what is a direct cost for hotel companies? What's the key cost?
Yeah, so just kind of starting with foundational knowledge, I would say for any given payment, a merchant or a business or a hotel in this instance can expect to pay fees to a payment processor for processing that payment on behalf of the merchant, and then also to the payment brand itself. And seeing as the vast majority of payments that occur in the hotel space are card-based payments, I'll spend a little bit of time talking about direct costs for cards. But the payment brand costs that are assessed by Visa and MasterCard for card transactions, for example, are broken into what are called interchange fees and scheme fees. So interchange fees are fees that are paid directly to issuing banks. It's basically the bank that issues the credit or the debit card to the cardholder who's spending with you, and then scheme fees are fairly small fees that the card networks charge themselves for facilitating money movement from issuers to acquirers to merchants. These fees really vary pretty significantly, I would say, on a number of factors. The country or the jurisdiction where the processing is happening, the card that's used, whether or not it's an in-person or an e-commerce payment. For example, in Europe, interchange is regulated at 20 basis points for debit cards, 30 basis points for credit cards. In the US, on the other hand, it's largely unregulated. There's some regulation for debit cards, but for credit, it's mostly not. And so you see interchange fees, for example, in the US being quite a bit higher.
And it's a good point, Blake, because you mentioned there's three components in a card transaction fee for hotels and any type of merchants. There is the interchange, which is set by the schemes, and as you mentioned, is the revenue for the issuer. Then after you have the scheme fees, it is also set by the payment networks, and those two, interchange and scheme fees, as a merchant, as a hotel company, you don't have any leverage on it. The only thing that you can have some negotiation when you negotiate, for instance, with your acquirer is the acquirer margin. And then you mentioned also in terms of interchange or scheme fees that it is not exactly the same depending on the geography. Can you elaborate also, Blake, because it's important for hotels to understand what is a domestic transaction versus, say, like an international one?
Mm-hmm. Yeah, so a domestic transaction would be a transaction where the cardholder is located in the same country as the as the entity that's being used to process that payment. So if if you're in the US and you're working with a US processor and an American processes with you, that's considered to be a domestic transaction, whereas an international cardholder just spending for a booking at your hotel, for example, in the US would be considered a cross-border transaction, and almost always carries higher fees as a result of that.
Yeah. And a consequence of that, it's very important as a hotel company to understand, will you have like domestic acquiring or cross-border acquiring costs? Because then after basically the further you go in terms of where the card is acquired and processed, the higher fee you may pay. So understanding this with your current providers or your future ones, if you consider changing or adding some relationship, is very important from a cost component. We're talking about cards because obviously in the travel industry, cards have been playing a key role for airlines and hotels, but increasingly, and we've done some research as a consultancy with different organizations, we've seen that there is an increasing share of also alternative forms of payments that are not card-based. Can you tell us, give us some example, Blake, and in terms of alternative forms of payments and how costs vary also across alternative payment methods?
Yeah, I mean, this is something that my company is pretty acutely focused on. I think we offer something like 200 different localized payment methods globally. So there are a large number, but some that you might be familiar with in the US, I think PayPal would be a good example of an alternative payment method, a local payment method. In Asia, we have Alipay, WeChat Pay. In Europe, there are a lot of bank-based payment methods like Ideal or Bancontact. It really totally varies, I think, by market, but in many cases, alternative payment methods or localized payment methods can be cheaper than card-based payments, and certainly it contributes to a good customer experience and just providing a number of payment methods that your customers may want to pay with.
Yeah. And I think, Blake, you mentioned a key word, which is customer experience and customer needs. At the hotel, when you consider your customer, be it consumers or corporates, it's important to offer the payment methods they prefer. And when it comes to corporates, the payment method they need to be able to pay. So you gave the example of Ideal in the Netherlands, which is a payment preferred by almost 80% of Dutch people. If you don't offer it, then after you basically not catering for the needs of your customer and can expect lower revenues because some customers may switch brand if they don't have the payment methods they require. So understanding the customer preferences on both consumers and corporates, also the cost and all the other different aspects in terms of payment guarantee, chargebacks, and other aspects and cost that is paid either by your PSP or your payment partner is definitely important to take into account. Blake, I wanted to see with you, obviously Mike mentioned that there is some challenges in the hotel industry versus the airline industry where there is IATA and that a bit more consolidated perspective. What are the key challenges if we put ourselves in the shoes of a hotel organization to have a comprehensive and detailed overview of payment related costs at a regional or global level?
Yeah, no, I think ultimately it comes down to two things, right? It's insights and it's visibility. So by insights, I mean, do you, through your payment provider, have clear reporting that tells you exactly what you've processed on a daily basis or on a per transaction basis, and what the individual fees are for all of those particular transactions? And then visibility being, can you see that across all the locations within your portfolio? And what we find within the hotel space is usually the answer to those questions is no, or maybe it's maybe. And that's because of what Mike had mentioned earlier, where oftentimes payment processing doesn't necessarily always happen at the brand level, but can happen at the owner operator level. And you can, and there's just tends to be very fragmented payment processing setups, which Greg, as you mentioned, it is a real challenge in terms of getting a comprehensive view of payments across your entire portfolio and the various payments costs associated with all of your transactions. This is something that we see a lot of other industries do really well. Airline industry does a good job at this. Usually all the payments are processed at the brand level. I think we see that even the online travel agencies do a good job of this, and then other non-travel and leisure companies also do pretty well here. So I think this is a good opportunity for the hospitality space to potentially consider in the long term, and there's some great benefits in having that visibility.
Yeah.
Hey guys, I agree with you. Can I interrupt with a question from our audience?
Go ahead.
It's related to some of the direct payment methods, and the question is, what are the trends in payment methods used by corporate travelers versus leisure travelers, and do you see a difference?
Yeah, I can touch on that. I think for the most part, we still see that corporate travel is primarily booked on commercial credit cards. Cards issued directly by the company, it's corporate cards. So it's card-based spend for the most part, usually through one of the major card schemes, so Visa and MasterCard, for example. So if you're accepting Visa cards, MasterCard, then you're covered there. The alternative payment methods and the localized payment methods are really quite relevant though for consumers, for leisure-based travelers. And I think there's been so much innovation in the fintech space, particularly in economies that are developing quite rapidly, that don't have like a legacy banking infrastructure. Think of China, Brazil, and so there have been a lot of upstarts that have done a great job of getting new consumers into a digital financial environment, and we see new payment methods popping up as a result of that. And so I think that making sure that you're on top of local payment methods and offering what's relevant to your consumers is important now and will continue to be important in the future. It's not just card-based spend for the leisure space.
Thanks.
Just to complement Blake, and definitely agree, it's mainly card-based for corporates. What we can see is an interest from both hotel, airline, or travel-related companies, but also corporates to potentially use other rails such as like instant payment, which is fast developing in different markets across the globe, and this would allow like a direct payment from the corporate directly to the travel provider. That being said, it still needs to be matured and needs to also have a similar value proposition. When it comes to payment cards, there is also insurance assistance, and it's important, especially in the corporate world, to have this same level of services associated to payment.
And if I'm not mistaken, in many parts of the world, the types of cards that are issued for corporates tend to be, or actually I shouldn't say, the question is, are they much more expensive when it comes to interchange than the consumer cards, and specifically within the European market where there is regulation? How does the corporate card tie into that regulation schematic?
I can touch on that if you want. Basically, there's a regulation that there is in Europe is only on consumer cards. It doesn't include like corporate cards with corporate pay, and this means that the interchange is much higher. So we worked with different hotel chains to basically have like a cost of payments acceptance, which is basically to understand all the different types of cost that some hotel brands pay, depending on the type of cards, and splitting at a very granular level. And commercial cards are much more expensive than consumer cards. But it's also like a requirement for corporates to use their cards. So sometimes it's a trade-off between the type of customers you want to have and the payment methods and the payment costs that you need to accept. That being said, understanding already the cost and is key. And to your point, Blake, about the challenges for hotels, because the hotel world is very fragmented, with the hotels that are owned by the payment brand, with the franchises, and other models, it's very hard sometimes to have like just an overview of the simple stats in terms of the number of transactions, the transaction value, the fraud, and there's different ways of trying to get to this level of understanding. One is to consolidate on the acceptance level, to have like a centralized acceptance payment platform for both e-commerce and or proximity, which allows to gather some stats. The other is more on the acquiring part, to have a common set of acquirers, which basically allow for some consolidated statistics. We've done that for instance, a hotel chain in Europe, and they moved from 40 acquirers in 20 plus countries to a couple of acquirers, which basically allow to have like a more detailed and better understanding of payment. But this remains a challenge. And actually that leads to a comparison. It's always good to compare the hotel versus all the merchants in the travel vertical. Blake, do you happen to know like all the travel verticals and maybe merchant names who actually have succeeded in gaining this global comprehensive view?
Yeah, I touched on this a little bit earlier, but I think the airline industry has done a good job of this, where all payments for the most part are processed at the brand level, with the exception of maybe some third-party bookings. The online travel agency within the travel space has also done a good job of this as well. And then most other industries that we work with have done a good job at this too. So digital platforms, even like I would say the food and beverage vertical has done a fairly good job of this too, although there can be challenges there, particularly with franchises. But even some of the largest like quick service restaurant chains or fast food chains have done a good job at this, which is somewhat relevant, I would say, given the franchise model that exists within hospitality too. So it can be done. It can definitely be done.
It can be done, but one of the two challenges is the fact that in the hotel industry, it's very fragmented. And then after you have the different types of fare between prepaid and postpaid, which you never go to a shop, take a t-shirt and buy it at the end, like a week later, say. So that's also one of the challenges in the hotel industry. But that being said, by understanding some of the challenges and try to consolidate to have this global view of payments, then by having the data, you can make also the correct decisions in terms of which payment partners to work with, which payment methods to accept. And once you have the key statistics related to payment, you can really start to empower payments. We have done like a study among different merchants, and basically there was a strong correlation between the merchants who have a dedicated payment manager or dedicated payment department and the way they manage to optimize cost and also drive additional revenues. So last question, Blake, when we look at the direct cost, if you had to give some advice to the audience and people listening to us related to direct cost, what would you say?
Yeah, I think there's probably a lot of things. I would say, at the very basic level, find a payment processor that's going to give you transparent pricing, and that can give you an opportunity to consolidate as much of the processing under your portfolio as possible. I think what Greg mentioned about working with that hotel brand that had 40 different acquirers and consolidating that down to 2 obviously does wonders in terms of minimizing operational overhead. But also when you consolidate your volume that way, you gain a little bit more leverage that could potentially go a long way in negotiating rates directly with processors. I think a couple of other things that are worth noting. We haven't quite touched on this yet, but I would just keep a close eye on your chargeback rates, and make sure that your fraud is low. I would say below like 10 basis points would be a good benchmark. For non-fraud related chargebacks, just maybe take a look into some of your customer support processes to ensure that inquiries are addressed as soon as possible, so that those don't inevitably lead to chargeback transactions. We touched on kind of local non-card based payment methods. Offering those can sometimes give you a cheaper path towards accepting funds from consumers. Yeah, I would say that those are probably the big things that I would touch on to start.
Yeah, and that's good points, Blake, especially when you consolidate volume, you have better rates with your payment providers, which is always good to have some savings. And when you talk about fraud and chargeback, because often it may be processed at the property level, it's hard to gain like an overview, and trying to have this the more global or consolidated view will definitely help to better understand if is fraud an issue or not? What is a position on chargebacks? And actually, that leads us to a good transitions towards.
Actually, before your transition, can we ask a question from the audience about fraud?
Go ahead, Mike.
So small hotel, the question is from Ben, thank you. Small hotels have a hard time measuring fraud on a large scale. Is there any technique or company that does a good job keeping a tab on this? And I think this speaks to the challenges of property centric, but have you seen any brands looking at hotel brands looking at fraud across their properties?
Do you want to start, Blake?
Sure, yeah, yeah. I mean, I think those insights are certainly possible, right? If you work with a processor that has strong reporting, good dashboards, I mean, they should be able to tell you what your chargeback ratios are as a percentage of your sales, and then the breakdown of chargebacks by chargeback type. So you can easily deduce what percentage of your overall sales are seeing fraudulent chargebacks. Some companies choose also to work with fraud vendors, standalone fraud vendors that can provide these types of insights too. But again, I think this all really comes down to reporting and to insights that are oftentimes available within cloud-based dashboards that you can access from your own personal computer. So it's possible. I'd say it's a processor capability. That's my initial response. Greg, I don't know if you have anything to add.
I think you touched on a key part is reporting, and basically it's also the KPIs that you decide to follow. If you don't set yourself some KPIs related to fraud, related to chargeback, be it at a property level or at a brand level or across brands, because we know that hotels often have groups have the different types of brands, it allows you to try to follow up as closely as you can the fraud, the chargeback, and go also deeper, because you may have your overall fraud rate, but what is the different reason codes behind this fraud? Is it a friendly fraud? Is it some account takeover fraud? Because you may have different types of fraud also within the hotel industry, and getting a bit of a granular understanding helps you to understand like what kind of fraud prevention strategy I may define. Is it working with my own PSP acquirer? Is it working with a standalone fraud prevention vendor? What we've seen is some at a hotel property, if you manage to get some KPI, you can maybe have an understanding because it's your hotel, but you need to be able to have the rigor to basically look and process all the chargeback and consolidate it if you don't have a specific dashboard. When it comes then after to a more a brand, or when you have a larger amount of hotels, it's also trying to collect data from your different hotels, especially if they're franchises, to basically understand, is fraud an issue, and do I need to actually to do something, or do we have it under control? So hopefully we have answered the question. If not, please don't hesitate to ask more, and we'll be happy to share also with our experience. And we've seen from our experience some hotel brands working either with their own payment vendors or looking at the fraud prevention vendors that actually try to provide some fraud prevention solution to their own hotel as well as the franchises to basically get a bit more understanding on cost and make sure that cost is not something that is basically eaten the margin in the hotel sector. And that's still a good transition towards the second part of our discussion, with a focus on hidden and indirect costs for hotels. What do we mean by indirect and hidden costs? Basically, those are costs that are not directly charged by a payment provider on an invoice, but they're still costs that are incurred by hotels and paid by merchants. For sometimes it could be like cost of integration that you need to do, or maintenance with like a payment provider payment method. It could be also, for instance, the fraud or chargeback cost if you don't have specific KPIs, and it's basically something which basically slips through your hands and don't necessarily have an understanding. And those cases, as you know, payments is complex. That need to be taken into account to make sure that it is understood by a hotel. What's your perspective, Blake, on those indirect or hidden costs?
Yeah, I mean they add up, and you hit on a few of them, obviously, right? It's not just the interchange and the scheme fees and the processor fees. It's the cost of payments terminals, it's integration costs, it's cost to establish a gateway for e-commerce processing, fraud and chargeback related costs, and then also there's just like the opportunity costs and the general time that's spent to manage payments, whether that be combing through reporting on 30 or 40 different portals and trying to match up bank statements with written reports from your processors. So there's a lot of time that can be spent in focusing on payments. Again, consolidation can minimize that time. But yeah, there are a number of indirect costs, obviously, that are tied to accepting money from your consumers. It's not just the direct per transaction cost that we touched on earlier.
Yeah, no, definitely agree, and it's trying to get like a comprehensive view on what is also some of the manpower that we put, for instance, on IT development or maintenance, because those are still costs that, and the question is, do we need to incur them, or can some of the payment provider potentially also facilitate this change? One thing which is sometimes overlooked is FX, foreign exchange. The booking can be done in a currency, but the payment/settlement can be done in another currency. What are your perspective there, Blake?
Yeah, foreign exchange is definitely a significant cost, especially in the hospitality space where you have international travelers, right? And so, I mean, typically what we recommend is optimizing for what we call like for like settlement as much as possible. So that means, receiving funds in the same currency that you're charging for. Anytime that you don't do that, you're going to incur some sort of FX cost. And typically foreign exchange is more expensive through the card networks or through card processors than it may be through commercial banks. So yeah, that's just something to keep an eye on, I would say, as those fees can add up. I think it's an inevitable part of hospitality, right? You're going to need to charge in multiple currencies. But if you have the ability to settle in multiple currencies, not just in your home currency, for example, you can really reduce foreign exchange costs.
And it's a good point. And I guess it's also a matter of trying to understand what has a cost, who is paying for it. It's obviously the hotel, but who is charging, and trying to gain a better understanding of what makes sense as well, and potentially how to save some money. We talked about fraud a bit before, because there's some direct cost in terms of what are the fraud losses or the chargeback. But you mentioned also during our discussion that there's also the fraud prevention teams, the manual review, all the different also the chargeback processing costs that may incur lost sales and is time consuming. What is the key hidden or indirect cost when it comes to fraud and fraud prevention?
Yeah. I think it's obviously fraud is hard because not only are you losing the entire sale, for which you provided services, but you're spending quite a bit of time and energy submitting evidence probably through your processor to try to fight a particular chargeback, monitoring the life cycle of a chargeback to see how it's been decided upon. If you have an active fraud strategy rather than a passive one where you're trying to root out fraud from the source, then there's quite a bit of work involved in either working through your processor who may have a fraud solution or working with a standalone fraud vendor to establish certain risk rules and fraud scoring to attempt to identify fraud at the source so that it doesn't actually, make its way through an official transaction. There are also additional fees that are charged from the card networks for fraudulent transactions and from processors. In Europe alone, I think standard chargeback fees, Greg, are probably somewhere around like 12, 15 euros per chargeback. So there's a lot that goes into it. Fraud is a pain point for sure. And I mean, traditionally, I would say there's much less fraud in an in-person card present environment than there is online. I think e-commerce transactions have tended to be a little riskier. We think that gap is narrowing a bit as there's more data and more security in the online world. But yeah, that's something to also be aware of. If you're taking payments in person and you're verifying the ID, with the card that's being used for payment and that payment's being processed over a chip reader, then chances of fraud are mitigated pretty significantly there. So that's a good practice to follow, I would say.
Yeah, thanks, Blake. And I think it's very, very important to be proactive when it comes to fraud, because it will allow you to keep fraud under control, understand the new patterns. Basically, fraudsters are professional nowadays, and then after they will go into any kind of opening where they can get on fraud, and this can amount quickly to significant amount of money for any types of merchants. So being proactive, following the KPIs, making sure that fraud is under control. And then after another potential negative of fraud is also all the cyber threats, the theft of payment details, that will incur direct costs, but also negative press, negative aspect on brand, which basically will also be detrimental for the brand in the hotel industry. Related to fraud, we can talk about also, you mentioned, Blake, about a heightened level of security for e-commerce payments. We can't have a webinar on payment without talking about strong customer authentication in Europe. It has been a big pain for a lot of merchants. What is the impact that you've seen? We've discussed with different merchants that mentioned in the travel sector that they have seen a decrease of 10, 15 basis points at the beginning of the SCA in Europe, and progressively they've seen this level of sales increasing. Did you have seen similar things, Blake, among your customers?
Mm-hmm. Yeah, absolutely. And for those that aren't familiar with strong customer authentication, it's a piece of regulations come out of Europe that essentially requires all e-commerce transactions to have some sort of form of customer authentication. And oftentimes the protocol that's used to verify the identity of a customer is through a service called 3DS. And that's gone a long way, I would say, in Europe in reducing fraudulent transactions. Obviously, it's very difficult to get through as a fraudster if if there's a two-factor authentication request or a bank verification request, you may not have access to that phone number or that login. So It's been really effective. Obviously, there's an element of friction there that's made it a little bit more challenging from a customer experience perspective. But I think consumers in Europe, at least, are getting much more comfortable with that flow. So yeah, I guess for hotel operators here who aren't in Europe, 3DS might be a tool to look into to mitigate fraud for transactions that you deem to be risky. Maybe they're really high dollar value transactions, international transactions, transactions from customers you're not familiar with. Using this service, you can essentially challenge a customer to prove their identity. And then upon a successful challenge, the fraudulent liability shifts over to the issuer of that card. So you're protected in the event of a chargeback.
Thanks, Blake. And I think SCA is also like a pain point for the hotel industry, because compared to some merchants where you buy something online and after you use the card and you process it instantly, in some cases in the hotel, you just put your card number and basically the card transaction will be processed like a few days before the arrival of the guest or even on the day. But when you process it, if it happens to be in the middle of the night, the guest will not do their strong customer authentication in the middle of the night, or it will be also confusing. So there's still some significant challenges ahead of us, and finding some solutions specific for travel and the hotel industry is definitely key. Another indirect and or hidden cost is related to all the manual processes when it comes to payments and hotels. For instance, the manual processing of payment cards at hotel property, the chargeback manual processing. What are the consequences, Blake, from all those manual processes when it comes to payments?
Yeah, I mean, usually you're either taking up time of employees that could be focused maybe more so on customers or on other parts of your, of hotel operations, or you had just quite frankly have to hire more people to handle those things. Or I guess maybe a worst case scenario is you just don't handle them appropriately and things fall through the cracks. But yeah, as you mentioned, there's quite a bit of operational work that goes into managing everything around payments, from reporting to accounting to fraud and chargeback management to payments acceptance itself and the technical work behind all of that. So it really is quite an operation, but when done right, it can there's a lot of money to be saved that can impact the bottom line, and when done right, you can really provide a great experience for your customers.
And that's a good point, because manual processes cost, like people at the check-in on the counter that are doing the manual processes of cards do not focus on other tasks. There's also the risk of fraud, mistake as well. We've seen that some hotel brands try to centralize the acceptance and do some integrations between their PMS and the payment providers, can remove this type of frictions, these manual processes, and then after they can have benefits because they can have like a broader view on payments, and some consolidation in terms of payment stats and data. But this requires also change management, and change management also come from the top, and we'll discuss that in the last part, because in a way, compared to 10 or 15 years ago, payment has become strategic. It's often like a topic that is mentioned like high up in the organization. To give you an example, we're recently at a conference of IATA, and payment is one of the 3 priorities for CFOs and senior management, and I think it's relatively similar also in the hotel industry, or increasingly being so. And change management with an executive sponsor and how you also derive it through the organization is definitely key to empower you to have a better understanding of the direct costs, but also indirect hidden costs, and basically leverage payment as a driver to sell more and to sell better. With that being said, it transitions to our third part of our discussion today. If we look beyond cost, let's focus on the payment benefits, because obviously costs are important, but sometimes it's worth paying something when actually you have some additional benefits when the with the correct payment setup. So Blake, when we have a look at payment benefits, the first thing that comes to mind is conversion. What you could share with us on terms of payment conversion and what avoiding missed revenue potentially for hotel merchants.
Yeah, absolutely. I think we've been talking a lot about the bottom line, right? And how you can save time and save money by focusing on payment costs. But there's another element of payments, which is how do I provide a seamless customer experience where payments work as much as possible to capture as much revenue as I can. And, card payment transactions don't always lead to a success, especially in the online payment space. There's a term called authorization rate, which is essentially the percentage of card attempts that lead to a successful payment. And in the e-commerce space, we see its average authorization rate of probably somewhere around the mid 80th percentile. So let's call it 15% of all transactions are not actually being captured. There's many reasons for that, right? It could be as simple as the customer just doesn't have enough money, in which case there's really not much you could do there. But there are a lot of kind of gray area type declines, fraud related declines, or declines where the issuer doesn't feel very comfortable approving that transaction, or maybe the message wasn't formatted, correctly. And a lot of this can be on your processor. So it's, I think, really important to work with a processor that uses data and machine learning to optimize for card performance, because every 0.1% is really more revenue for your business, and it ultimately provides a better customer experience when a payment goes through rather than constantly seeing declines. I think that's really big. And then there's another concept of conversion, I think, just from a checkout perspective, getting people not to fall off the checkout experience, but actually to complete the checkout. Part of that from a payments perspective, I think, is offering a number of different payment methods so that customers have the option to pay with a method that they're comfortable with, that they want to pay with. And then oftentimes, at least in an online environment, there's a general principle that the more steps that are involved in checkout, the higher chance of a customer falling off. So if you can think about maybe one-click checkout solutions, seamless solutions that don't necessarily require a customer to enter their 16-digit number, their CVC, their zip code, their address, etc., that can also, I think, go a long way in optimizing for payment conversion, which at the end of the day, again, means more revenue for you and a better experience for your customers.
Definitely, Blake, and I think that when it comes to conversion, access to the data is key. We've worked with an actor in a travel merchant who didn't look at conversion. We looked at conversion because you can look at it per country, per payment methods, and then you can go more granular. And for payments from the US, it was a European merchant, their conversion rate was 50%. So basically 50% of people who were trying to buy on the website did not go through. Also on the payment benefits in the US, also with the interchange optimization, that's something which is important, and then after it can link to conversion. So conversion is key because it increases revenues. It avoids frustrations of genuine customers, and it's very important to focus as a key KPI to follow. Another important part is payment types. We mentioned about the alternative forms of payments, offering the right payment methods to your customers can lead to also higher conversion. And from your perspective, Blake, what is the correct mix between global payment methods and local payment methods?
I think the global card brands, right? Visa, MasterCard, Amex to some extent, right? In my opinion, should be accepted everywhere, right? And then there are local payment methods, either card based. In France, right? Gregoire might be something like carte bancaire. In other markets, it could be local payment methods that are non-card based. So having an appropriate mix of global payment methods, mostly the card schemes, and then whatever local payment methods are relevant in your particular country, I think is really important. Also, you know, this is a session on total cost of acceptance, but I think it's important not to discriminate on payment method and to not have an aversion to higher cost payment methods. One that comes to mind, I would say, is American Express, which historically has a reputation of being a little bit more expensive, but also is incredibly valuable within the travel segment. Their portfolio tends to be high income earners who are willing to travel internationally, and so accepting those cards is critical in customer experience and capturing revenue as well.
And that's right. Payment type is definitely also related to customer experience. This is key for any types of merchant, but especially for hotels. You mentioned like Amex, Visa, MasterCard for corporates. You need to accept the payment methods of your corporate customers. Otherwise, they will choose like another brand and another hotel, and it results in lost revenues. And you mentioned there's different types of in terms of customer experience. We need to take into account the different points of interaction. So there is the online booking, but there is also the check-in and also the checkout. And depending on the customer experience, if you want to facilitate the payment checkout, as you mentioned, Blake, to have like one click or even like frictionless, you don't need to do anything, and the payment method that may have been used online or check-in can be used automatically. Do you have, from your perspective, how can payments contribute to this like self-check-in or optimize check-in and checkout experience?
I feel for what hotels must go through, because I think that the payment flows in the hospitality space are quite complex, right? It's, you have, so in some situations, maybe consumers prepay for a hotel, so that's fairly simple, but in many situations, they don't want to pay till they get there, and maybe you want to place a hold on their card or at least store their card details in case of a no-show, and then there's the payment for the reservation, but also payment for incidentals. So it can be quite complex. I think what most hotels do, at least what I've seen, is they will capture payment in person at the time of check-in, which is fine, right? Like the card present payments tend to have higher approval rates, lower fraud. They're a little bit cheaper as well. But one of the things that we're just starting to see more generally, I would say, is a shift to e-commerce payments and kind of more seamless, kind of almost invisible payments experience, where a hotel could theoretically capture card details at the time of booking, store those securely in the background, and then simply charge their customer behind the scenes at the time that they check in without the need for any payment credential to be presented. And the same could be done for incidentals on that stored card. And ultimately that provides a more seamless customer experience, where you can do some really creative things around how you're getting your guests to check in, and just not necessarily being tied to needing to accept a physical card at the time that they do meet with a host or a hostess.
Exactly, and payment is becoming part of the customer experience. It could be stored on a wallet of the hotel brand, another wallet, and basically facilitating this experience. And I think that now, because we have like just a few minutes remaining, we can maybe try to summarize the discussion, Blake. I think that we had a look at basically the direct cost, the indirect/hidden cost, but also looking at the payment benefits. I would try to maybe to summarize, saying that payment has become strategic for all merchants, but in particular for hotels. Gaining a detailed, comprehensive overview of payment-related data and cost in particular is key for hotels, because then they can have a granular understanding of their cost, act on it, see what can be optimized, and basically understand what they're paying to the provider, where they could optimize, and basically defining the correct approach with a cost structure that will bring also the expected benefits to drive revenues and growth. I'm not sure if you're in line with this, Blake.
Perfectly said. Couldn't agree more.
So basically, then after there was a question is, how can you get there? And we mentioned about change management. I think it needs to come also from the top and be worked out at a different level in the organization, thinking that not necessarily payment is like necessarily burden the cost, but it can be also a profit center. We can talk also about foreign cards, where basically they can become a source of revenue when it comes to the conversion rate and the FX you can play with. And basically, from our perspective, we've worked with different travel merchants. The key part is to have an understanding of your payment stats, payment data, to get a better understanding of the current situation. This is a foundation, and then after you can basically derive from that a sound payment policy, a future state, and then after define and get basically leverage payment as a lever to grow. And Blake, I'm not sure if you've done that or if you've seen that in the industry.
Yeah, I mean, I think we're starting to see it with some of the major hotel brands who are really taking a look at their processing setup and understand the challenges with fragmentation and with poor visibility. And so we think that those brands are going to have a unique advantage in their attempts to consolidate and modernize. And we encourage obviously anyone in the hospitality space to consider the same.
So hopefully this was useful. And another last statement is payment is important, but it's also even more important in a post-COVID world. Because we've been hit hard during the pandemic, but payments can act basically as a catalyst also to support the growth in a post-COVID world.
Yeah, absolutely. I think, yeah, and we've touched on this a little bit, but COVID, I think, at least in the payment space, has really accelerated a shift to e-commerce in many industries. I think, it's quite obvious as we're at home more, we're shopping on our phones, on our computers. We don't want to be touching physical cash. We want to minimize face-to-face experiences. I think that can also be relevant in the hospitality space, and something we've already touched on, obviously, but something to consider to just make the overall check-in and check-out experience more comfortable for your travelers.
That was an absolutely great discussion, guys. I think you probably could have gone into another 3 hours level of detail, but that was a fantastic overview of just how complicated this is and some of the changes that the industry is undergoing. And Blake, you use the word modernize, and you might see me start using that too, because I really think that's the approach the industry needs to take. With that, I would love to thank you guys for this discussion, for your time in preparing for it, and for your insights. To everyone else, again, thank you for joining. And we look forward to seeing you at, I mentioned earlier, we will not be doing an in-person conference in Vienna. We will be doing a HeadNet Home event on, I think it's February 1st, but information will be coming about that in the coming weeks. So thanks, gentlemen. Have a great Tuesday, and to everyone else, thank you.
Thank you. Have a good day.